Could we see a slowdown in spending among luxury consumers? Well, in a new note from Barclays, gift spending during the holiday season fell below 2022 levels, the biggest slowdown coming from luxury spenders. That slowdown can be seen at luxury retailer Neiman Marcus. The company said early indicators suggest the holiday sales are down low single digits compared to last year. Joining us now is Geoffroy van Raemdonck, the CEO of Neiman Marcus. It's great to have you on. Thanks for being with us. And I do want to start right there. What are you seeing for the holiday season? And if we are talking about sales that are down during the holiday quarter, how does that compare to what we've seen in years prior?
Well, great to be with you, Morgan, today. When we look at our performance in the holiday, we are in the luxury market. That market is experiencing a slowdown, and it's also a market that is promotional, specifically online. As you mentioned, we experienced low single-digit negative compared to the prior years, which is still up to compared to 19. When I look at our top customers were up, and categories that are more luxury, such as shoes, handbags, and jewelry, were also up compared to last year.
So what does that mean in terms of, you just talked about it, the discounting environment in luxury? How much of that is related to inventory mismatches? How much of it is a reflection of higher-end consumers trading down and being more price conscious than we've seen in the past?
I think there's a little bit of the inventory, although in our case, our inventory is pretty much where we would like it to be. And I would think that that might be coming true in the future in the industry. I think where the promotionality is really happening, it's online, and where there's a customer who's been trained over the last year to be more promotional, and I think that's probably going to stay. Now, what we are able to see is that with all the activities we have in stores, the activation we have in stores, or stores were relatively flat to the prior year, and that's because we are able to, through our sales associate, do a lot of activations. We had 1,000 events. We had 300,000 customers who came to our restaurants and enjoyed the time with us. And I think those customers are much less price sensitive when they're buying a product, but they're also experiencing an experience. I
think you just touched on it a little bit there with that response, but there's been a lot of focus on direct-to-consumer and the growing competition from the brands themselves. How are you navigating that? How are you luring more shoppers, more foot traffic into the actual stores?
Well, the brands have seen that the U.S. market is a growing market, and it's been growing. It's relatively more attractive than other markets. So they're investing in this market. They're investing in their own distribution, but they're also investing in selective multi-brand retailers. And for us, we've seen since COVID, 800 points of distribution increase with our top luxury brands. That's 200 points of distribution more last year. We've added 185 new emerging brands. And so the brands are clearly seeing that there are a few retailers who have relationship with their sales, through their sales associate with that customer, and they're doubling down with those. We are driving growth for those brands. Our top 20 brands were up 60% compared to pre-COVID by the end of July, the end of our fiscal year. And I think that shows that there's different models out there. Some models are winning, and the brands are leaning towards those. I mean, our view of driving traffic is very much around leveraging the sales associates. Our sales associates really know our customers, and last quarter, 23% of our sales were driven by our sales associates selling to customers who were not in the store.
So I am going to ask about Saks, because there's been a prospective marriage that's been rumored between your company and Saks really for years now. It gained some steam in recent months again, with reports of a rejected offer from Saks by you. Are you talking to Saks?
So there's been rumors forever about a potential marriage. I don't speak about speculation or rumors. What I can tell you is that we're not in an open process to sell the company. The shareholders are investing in our company and in long-term growth. We've put $200 million in our store. We are putting $200 million in our stores. We're investing in our supply chain. And we have strong balance sheet and strong liquidity. Now, if someone is interested in buying the company, they are always welcome to engage with us. But the shareholder view is we are here for the long term. There's no urgency to make a transaction. And they're indicating commitment to our business model and the long-term viability of our company.